To this day, Berkshire Hathaway still maintains a very large portion of their portfolio in bank stocks. So we're going to get to why Warren Buffett has kept Bank of America stock right now, coming up. Now, remember to leave a like, comment, subscribe, and hit the notification bell for more.
Well, banking is a good business if you don't do dumb things on the asset side. I mean, basically, and it's a business that the banks we own earn between the commercial banks earn between 12% and 16% or so on net tangible assets. That's a good business. It's a fantastic business against the long-term bond. At 2%. If you have a choice between a 2% instrument and a 12% instrument, which one's going to win over time? So if you ask me whether I think banks are going to go down where they only earn 3 or 4% on tangible assets, I don't think that'll happen.
I wanted to ask you to comment on the relative PE multiples of bank stocks versus the S&P.
Ask about the performance of what group compared to the S&P?
Banks.
Banks? Well, I don't really think about them. I mean, the appropriate multiple for a business relative to the S&P will depend on what you expect that business to achieve in terms of returns on equity and incremental returns on incremental equity versus that S&P. I mean, if you've got two types of businesses, and we'll say the S&P earns X on equity and can deploy an additional amount of capital at Y, and then you compare that with any other business, and that's how you determine which one is cheaper. I would not characterize all banks as the same. I mean, we have in this room John Forlines, who runs the Bank of Granite, North Carolina, and they've earned 2% on assets without taking any real risk for decades, and it's a tremendous record. And then you have other banks that have been run by people that took them right into the ground. I mean, whether it was First Pennsylvania going back 30 years ago, I think it was John Bunning, and they're not a homogeneous group. We own a couple of stock in a couple of banks. We own stock in M&T that has an exhibit downstairs today. We own stock in Wells Fargo, and we think those institutions are somewhat different than other businesses. So I don't think it goes back to that earlier question. People always want a formula. They go to the intelligent investor and they think, somewhere they're going to give me a little formula and then I can plug this in and then I'll make lots of money. And it really doesn't work that way. What you're trying to do is look at all the cash a business will produce between now and Judgment Day and discount it back at a rate that's appropriate and then buy it a lot cheaper than that. And whether the money comes from a bank, whether it comes from an internet company, or whether it comes from a brick company, the money all spends the same. Now the question is, what are the economic characteristics of the internet company or the bank or the brick company that tell you how much cash they're going to generate over long periods in the future? And I would come to very different answers, on M&T Bank versus some other bank. So I wouldn't want to have a single yardstick or relative PE that I went by. I think that banks have sold, a good many banks have sold at very reasonable prices. We bought all of a bank in 1969. We bought a bank in Rockford, Illinois. Charlie and I went and we must have looked at a half a dozen banks at that, in a 2 or 3 year period.
Absolutely.
Yeah, we trudged around and we found some very oddball banks that we liked. And they were characterized by very little risk on the asset side and very cheap money on the deposit side. And even Charlie and I can understand that. And low prices, incidentally, too. And then they passed the Bank Holding Company Act in 1969, and they killed off our chances to do anything further in buying all of banks. So we look at banks. We will own bank stocks from time to time in the future. We'll probably buy stock in other banks. I wouldn't look for a single metric like relative PEs to determine how to invest money. You really want to look for things you understand and where you think you can see out for a good many years in a general way as to the cash that can be generated from a business. And then if you can buy it at a cheap enough price compared to that cash, it doesn't make any difference what the name attached to the cash is. Charlie? There are a number of banks that over the last 5 or 6 years on tangible net worth, a number of them have a lot of goodwill, but on tangible net worth have earned over 20% on equity. You would think that would be difficult for an industry to do, dealing in a commodity like money. And of course, the bankers will argue it's not a commodity, but it's got a lot of commodity-like characteristics. And you would think those kind of returns in a world of 6% long-term interest rates and much lower, you'd think that would be very hard. Well, you would have thought it wouldn't have occurred, and you think it'd be hard to sustain. We've been wrong in the sense that banks have earned a lot more money on tangible equity than Charlie and I would have thought possible. Now, I think to some extent they've done it because they've stretched out equity much further than was the case 20 or 30 years ago. I mean, they operate with more dollars working per dollar of equity than people thought was prudent 30 or 40 years ago. But however they've done it, a number of banks have earned very high returns on equity in recent years. And if you earn high enough returns on equity and you can keep employing more of that equity at the same rate, that's also difficult to do. The world compounds very fast. Banking as a whole has earned at rates that are well beyond, on tangible equity, well beyond, I think, what much more glamorous businesses have earned.
Warren Buffett owns over $28 billion of a beaten down stock known as Bank of America. It is very important to mention that Warren Buffett has sold off Wells Fargo as well as PNC Bank and M&T Bank stocks, also along with JP Morgan and Goldman. According to the Motley Fool, this big bank stock probably won't remain beaten down for too much longer. Warren Buffett has always looked for high-quality stocks. However, the Oracle of Omaha knows that the performance of a given stock doesn't necessarily coordinate with its quality. Bank of America serves as a great example. Its shares have fallen nearly 20% year to date and are around 25% below the previous high. But Buffett, led Berkshire Hathaway, owns $28 billion of this beaten down stock. So what Buffett likes about this particular bank stock is that Bank of America already ranked as Berkshire Hathaway's second largest holding before the banking crisis began. So believe it or not, Warren Buffett actually did purchase Bank of America stocks in 2023. Buffett likes several things about Bank of America. He's been a long-time fan of bank stocks because of their business models. Bank of America stands out above most bank stocks, though, in part because it's diversified businesses. The company has 4 business segments: consumer banking, global wealth, investment management, global banking, and global markets. Bank of America has steadily increased its dividend over the last 10 years and currently offers a yield of over 3.5%. Now, it is very interesting to take a look at shares that Warren Buffett did sell off, including M&T Bank, which at this current moment is performing way better than Bank of America. And their stock right now per share is worth $142.06, which is about 3.66% dividend. And that equates to $1.30 per share. And he completely unloaded JP Morgan, Goldman, PNC, and this stock, M&T Bank, and I believe it was according to a panel that he was doing for Berkshire that he actually did own M&T Bank, and he bought M&T Bank stocks way back in 1988. So it's really a very interesting, way of doing business to unload all of these stocks, even when some of them, like M&T Bank, is performing better than Bank of America right now. So what do you think? Do you think Bank of America is a great buy right now? Leave it in the comments. Do you think Warren Buffett is correct in keeping Bank of America? Leave it in the comments. Do you think he is off in selling PNC? Do you think that was a bad move? Do you think it was a bad move to sell M&T Bank? Leave it in the comments. Remember to subscribe, hit the notification bell for more, and comment. Thank you so much for watching, everybody, and I'll see you in the next video.